All right, if you're looking to get into the world of Forex, I want you to think of this as your first real mentorship session. We're going to cut through all the noise, all the hype, and really focus on building a solid foundation for disciplined trading. Let's get started.
Okay, so here's the plan for today. We're going to start with what Forex trading even is. Then we'll get into why its massive size is actually a huge advantage for you. After that, we'll cover the tools you absolutely need to know. Then, and this is a big one, we'll talk about when to trade. And finally, we'll put it all together so you can make your very first disciplined trade.
All right, first things first. What in the world is Forex trading? You've probably heard a bunch of complicated stuff, but let's just push all that aside for a minute. Because at its heart, what we're actually doing here is super simple.
You know when you go to the airport for a trip and you walk up to that little kiosk to swap your money for the local currency? Yeah, that's it. That's Forex. You give them one currency, they give you back another. The only difference is, as traders, we're trying to make a profit from how those exchange rates are constantly wiggling up and down every single second.
So you're always going to see currencies listed in pairs, just like this one, Euro/USD. Don't let it intimidate you. All it's asking is a simple question. How many US dollars does it cost to get 1 euro? That's it. The price you see is just a snapshot of how those two economies are stacking up against each other right now. Okay, so that leads to the big question. You see that buy button? What actually happens when you click it? What are you really doing? It's actually really simple. When you buy a pair, you're betting on the first currency in the list. So for Euro/USD, you're betting on the euro. You're basically saying, I think the euro is about to get stronger, or maybe the US dollar is about to get weaker. Think of it like a tug of war between two currencies. And by buying, you're grabbing the rope on the euro's side.
Okay, let's shift gears a little. I want to talk about something that's a massive advantage for you as a new trader. We're talking about the size of the Forex market. And trust me, it's not just some trivia fact. It's a feature that you can actually use to your benefit.
I mean, just look at this number. We're talking $6 to $7 trillion every single day. That's not just big, that's a colossal ocean of money. And what that means for you is that the market is super liquid, which is exactly what we want. And this is why that volume is your secret weapon. See, smaller markets can get pushed around by big players, manipulated. But the Forex market, it's that giant ocean we talked about. It is way too big for anyone to manipulate. And that's huge for us because it means the charts, the price patterns we're looking at, they're much more reliable. What you see is a lot closer to what's actually happening.
Okay, so now you know what Forex is and why its size is a good thing. Now, let's get practical and talk about the how. We got to get you set up with your toolkit. And listen, understanding these next three things, pips, leverage, and risk, is absolutely non-negotiable if you want to stick around.
First up, pips. I don't know why, but people love to make this sound super complicated. It's not. A pip is just a tiny unit of measurement, that's all. It's like an inch, but for currency prices. If a price moves from 1.1050 to 1.1051, that's 1 pip. It's just how we count our wins and our losses in a standard way.
All right, next tool, leverage. This one might be the most misunderstood concept in all of trading. Basically, it's a tool your broker gives you that lets you control a bigger chunk of the market with a smaller amount of your own money. It's awesome because it can amplify your wins, but you have to respect it because it's a double-edged sword. It'll amplify your losses just as easily.
And that brings me to a massive myth we have to bust right now. People worry, can I lose more than I put in? Can I go into debt? The answer is no, you absolutely cannot. Any good, reputable broker has a built-in safety switch. If your losses ever get down to zero in your account, they automatically close your position. It's called liquidation. You're out. You can't go negative. End of story.
So how do we manage all this? It's all about controlling your risk on every single trade you take. So before you even think about clicking buy, you set something called a stop loss. That's just the price where you say, okay, if it hits this point, I was wrong, get me out. Then, and this is crucial, you use a position size calculator. You plug in your account balance, how much you're willing to risk, say 2%, and where your stop loss is. The calculator does the math and tells you exactly how big your trade should be. There's no emotion, no guesswork. You do this every single time.
Okay, you've got your tools. Now let's talk strategy. And look, forget all those complicated flashy indicators you see online. For right now, the single most powerful strategy for a beginner is just knowing when to show up. It's all about trading with the clock.
I mean, just think about it logically for a second. If the market is dead flat,
Just sitting there, can you make any money? Of course not. Your job as a trader is to catch a move. And big moves only happen when a ton of people are buying and selling when the volume is high.
And this chart here, this basically shows you the heartbeat of the market throughout the day. Yeah, Forex is technically open 24 hours, but that doesn't mean you should be trading 24 hours. Look at the Asian session. Kind of sleepy, right? Low volume. But then, bam! London opens, then New York opens. That's where the action is. That's where the big moves we're looking for tend to happen.
So let me give you some straight-up mentor advice here. Do not sit in front of your screen all day. It's a one-way ticket to burnout and bad decisions. Instead, you're going to be a sniper. You focus your energy on these specific windows of opportunity. That first hour of the London session and the second hour after New York opens. And one more thing. Stay away from major news releases. That's gambling, not trading. It gets way too chaotic.
Okay, deep breath. We've gone over the what, the why, the tools, and the timing. Now it's time to put it all together into a real actionable plan. Let's map out how you're going to approach the market with discipline, right from the very beginning.
So here is your first piece of homework. And listen, it does not involve real money. I'm serious. Before you even think about funding an account, you are going to open a free demo account. Think of it as a flight simulator for traders. You get the real charts, the real market movements, but you're using play money. This is where you practice. This is where you build your skills. Please do not skip this step.
And to make sure you don't get overwhelmed, because it's easy to do, I want you to live by the rule of 3. It's simple. 1, pair. Just focus on one currency pair, like the EUR-USD. Learn its personality. 1 session. Pick either the London or New York session, and that's the only time you're allowed to trade. And 1 strategy. Find one simple, clear setup and just stick with that. That's it. Keep it simple. That's your edge right now. Because at the end of the day, that's really what this is all about. You're stepping into an arena with some of the smartest, most well-funded people on the planet. Your edge isn't going to be some secret formula you buy online. It's not a magic indicator. Your only real lasting edge is discipline. It's doing the right thing over and over again, even when it's boring. So the only question left is, are you ready to build that discipline?